There was recently a study done by Russell Investments which sought to quantify the value of financial advice. The outcome? Advisors on average generate an additional 5.2% extra cash, regardless of market movements, through services such as asset allocation and behavioural coaching. Now, if you'd like to have a read of that study, I will link it in the description box below. But I'm not here today to regurgitate a study. I'm here to give you my opinion on financial advice based on my own experiences. After all, I am a financial advisor and therefore I have a pretty strong opinion on this subject. But before you switch off and think there's going to be overly biased towards financial advice, just give me 5 minutes to explain myself, and what I say might actually surprise you. Hello guys, Brad here from The Guided Investor. Welcome back to the channel for another video. If you're new here, consider hitting that subscribe button because I post regular videos about how you can do more with your money. And today we are talking about the value of financial advice. Broadly speaking, do I think everyone can benefit from financial advice? Now, if we ignore costs, then the answer would be a resounding yes. But we can't ignore the costs because obviously there are costs involved with going to see a financial advisor. And in order for the relationship to work, the benefits need to outweigh the costs. The way I look at advice is a bit like the way I look at the relationship with a personal trainer. Now, if you go to the gym regularly, if you put a little bit of time into learning new techniques, then you can normally get a pretty good outcome without the use of a personal trainer. However, if you did have a personal trainer, you're likely to fine-tune your technique, learn new skills, and above all of that, you're gonna have someone there encouraging you and pushing you to go a little bit harder than you would do on your own. Now, think about it. There is a reason why sportsmen, no matter how elite they get, still have coaches. They're the best at what they do, but they rely on their coach for that push, that motivation, and to keep them on track. So it's similar with your personal finances. If you're willing to put in the time and the effort that you need in order to educate yourself to create a good financial plan, then you can normally do a decent job yourself. And if you have the discipline to stick to that plan over the long term, then it's likely that you're going to get a good outcome. Where a financial advisor comes into play is if you want to take that plan to the next level. I generally summarize the value of advice in two key areas: tangible and intangible benefits. But if we want to break that down further a little bit more, we can look at strategy, investments, product, and discipline. A good financial plan is built around strategy. Your strategy is your roadmap to wealth creation. And a good strategy needs to take into account everything. So this includes your assets, liabilities, income, expenses, tax planning, estate planning, risk management, all of those things. And where strategy can get a little bit different or difficult is making all of those things work in harmony. Now, there are a lot of personal finance books out there which will give you the strategy component of your financial plan. So they will basically lay out steps in order for you to follow to build wealth over the medium to long term. Now, these plans are not bad, but unfortunately they don't take into account your personal circumstances. So the best outcome really is going to be from having a look at these strategies, but tweaking it to suit your individual needs. And you can normally do this on your own with a little bit of education and experience. If you see an advisor will work out the strategy for you. Now, it's not only our education and our experience that we use to put together the advice, it's also the resources that we have access to. And a lot of these resources, particularly on the software side, are not available to the general public, either because they're built for advisor use or they're too expensive to justify for a single person. For example, we have access to a number of complex financial modeling tools that we use to analyze someone's situation. So if a client comes to me and says, Brad, I'm thinking about either buying an investment property, starting a share portfolio, or contributing cash to superannuation, basically I will model all of those three scenarios and compare them side by side from a mathematical point of view to have a look at which one is going to provide the best potential benefit over the long term in terms of cash flow and net assets. Once I know the optimal strategy from a numbers point of view, I then overlap this with the pros and cons of each strategy, and also have a look at the emotional side of things, such as the ease of implementation and how it fits into your everyday life. Now, there are some areas of strategy which can get very complex. So for example, retirement planning. Trying to juggle the amount you need to save versus the age pension versus the Centrelink rules, that can all get pretty involved and it can get fairly complex. Not only that, but the government is always changing the goalposts on us with tweaks to legislation. So they're constantly tinkering with tax rules, with Centrelink benefits, with superannuation rules. And in order for you to run your own financial strategy, you need to keep up with that legislation and make changes to the strategy as the legislation changes. Now, this is not impossible to do, and it is possible for you to put together a complex strategy which takes into account changes in legislation, but sometimes it's just easier to outsource that to a professional. So in summary, if you understand how finances work and you're willing to put in the time and effort to educate yourself, then you can normally put together a pretty good plan. Where an advisor is going to help is that the work's going to be done for you, and the plan is going to be normally backed up by a little bit more analysis. The strategy forms the backbone or the foundation of your financial plan. And then we need to use products and investments in order to implement that strategy. They're basically the tools of the trade. When it comes to investments, unfortunately, there is no guarantee that if you pay an advisor to do your investing for you, that portfolio is going to outperform. Because at the end of the day, no one knows what's going to happen in the future with investments. And so you can't guarantee outperformance just because you're paying for advice. Now, don't get me wrong, we have a very good investment process. We put together our portfolios with an investment committee made up of very experienced investors, and we're constantly reviewing it. So I do believe it will perform well. However, there is no guarantee that just because we put in all this time, effort, and experience, that we're going to outperform some of the more basic options out there. Where an advisor does add a lot of value is in the risk profiling process. So that is putting together an asset allocation which is suitable for your specific needs. Now, at the end of the day, every investor has a different tolerance to risk, a different financial position, are at a different stage in their life, and you need a portfolio which suits those individual needs. For example, it's not suitable that a retiree who values capital protection has 100% of their money invested in Australian shares. Similarly, it's not suitable for a 30-year-old who needs to grow their funds to be invested 100% in cash and defensives. There is a mix between growth and defense assets that you need to take into consideration based on individual circumstances. Investing is also just as much about avoiding dumb decisions as it is about making smart ones. So, for example, earlier this year in March, when the share market was down roughly 40%, I had a number of people call me and ask if they should be switching their investments to cash. Now, my answer to that was no, and luckily I was able to talk these people off a ledge and actually encourage them to buy more growth assets at this stage. And looking on a few months, that was a wise thing to do. But the problem was they were operating off fear. There is a lot of emotion involved in money decisions, and sometimes having a third party there can really help sift through this emotion. So the third party is able to look at it from a logical perspective rather than one of fear and greed. And this can really save a lot of heartache and prevent you from making some silly mistakes. Then there are products. Products are basically the platforms that we use to implement our investments. And when you're looking at products, you basically do a cost versus benefit analysis. So you have a look at what the platform offers you in terms of investments, reporting, tax structuring, and you compare that to the cost to make sure it's value for money. Traditionally, product was an area of advice where financial advisors did fail a little bit. Now, not all advisors, but some advisors were actually incentivized to put clients with certain products, and this led to a lot of product push in the industry. So clients would end up with a product that wasn't always suitable for their needs. Largely, this era of product push has now gone from advice. In Australia, it is now illegal for advisors to take investment commissions from platforms such as bonus commissions. And there is a best interest duty. So the advisor needs to show that the product they're recommending is in the best interest of their client. Now, this has led to much better outcomes from a product perspective for clients. There are some product platforms in the marketplace that will only work with advisors. They don't work directly with clients. But as an individual investor, I feel there's enough array of products in order for you to get the job done. You don't really need an advisor from a product perspective. But if you do see an advisor, that advisor will likely recommend a product in order to implement the advice. So in summary, advisors can't guarantee outperformance by using their portfolios. But what they will do is make sure you're in a portfolio which suits your particular circumstances. Advisors are also there to act as a bit of a sounding board for your financial decisions, really to take the emotion out of your finances and stop you from making bad mistakes. When it comes to product, well, product is in play, but it's merely a means to implement the advice, and there's not a whole lot of value on top of that. Where a lot of people fall short in achieving their financial goals is in the implementation. They know exactly what they need to do, but they just don't do it. In reality, a lot of good financial plans are quite boring. They're not going to get you rich overnight. You're not going to be actively trading. You're probably going to be spending less and paying down some debt. So it's not really that exciting. And you can use motivation to get you started on this journey, but it takes discipline to keep you going. Without someone there pushing you and reminding you of the reasons why you're doing what you're doing, you can easily fall off the horse and forget about the plan. It's easy to fall back into old spending habits and go for that short-term satisfaction at the cost of your long-term results. So my job as an advisor at times really can be just to annoy the shit out of you. You know that every time we catch up, I'm gonna check in with you, check in with your progress, and if you haven't done what you're supposed to be doing, I'm gonna hold you accountable for that and ask questions as to why. I swear I have some clients that avoid me for this very reason, but at the end of the day, that is why you're paying me a fee. Some people are very good at keeping themselves motivated and on track, and if you're one of these people, then you don't really need that area of the service. But if you're the kind of person that will stray away from the plan quite easily because you've lost motivation, then sometimes having someone there to give you that poke back in the right direction can really be a valuable part of the experience. Broadly speaking, you don't need a financial advisor if you're willing to put in the time and the effort that it takes to educate yourself and implement a good financial plan, and you have the discipline to see that plan through, then you're normally going to get a fairly good result. However, if you want to take your financial strategy to the next level and you want to outsource that responsibility to a certain extent, then I have no doubt that a financial advisor can add some value. The value won't necessarily come from better portfolio returns, but it will come from better strategic management, having someone there to act as a third-party logical sounding boards for your investment decisions, and also keeping you motivated and on track to stick to your plan. These intangible benefits can be hard to quantify in dollar terms, which really does make it difficult to do a cost versus benefit analysis on advice, but it's often these intangibles that add the most value to your situation. But that's it for me today, guys. Thanks a lot for watching. I hope you liked this video. If you did, please give it a thumbs up and I will see you guys in the next one.